Good morning, traders. I hope everybody survived another day in these volatile markets. Let me just kill my squawk box here. Here we go. Okay. Can everybody see my screen with the data? So we're going to have to do without Ryan, who is unfortunately himself and his little one is sick today. Ryan had his double jabbing for the COVID and the normal flus, and it seems that some autumn bugs are have invaded Ryan's house overnight. So he won't be with us today. So I'm going to be your host. I think Stelios is going to join later, and we'll have a special guest as well coming up a bit later. Grega, the headmaster of the wave surfers, is going to be with us as well. Okay, first things first. What's happened yesterday and overnight? So the big event, unfortunately, last night was those two missiles or pieces of the missiles falling into Poland, and there was a lot to do about, of course, Poland being a NATO country, that there may be something really serious going on there. It appears that it's pieces of missiles that have been shot down by Ukrainian forces or so. But still, NATO is investigating everything. We should see some headlines coming out of that as well. In the meantime, the sanguine markets have traded it for about an hour or 2-3 hours, and then everything flipped around again. The rest of the headlines, we still have those G20 meetings going on the side of the official ones. That has finished. They condemned Russia, unsurprisingly, but for the rest, we haven't seen much coming out of those meetings between call it Biden and Xi, Yellen and Yi. They talked a lot, but they didn't give us too much to chew on, positive or negative side. For the rest, there's been a Fed study out overnight saying that the mortgage rate hikes could tank the home prices by about 20% in the near future. So as we've seen already, those the housing market suffering a bit, we should be keeping an eye on those on this evolution there as well. Because as we know that the jobs market will be the last domino block to fall, but in the meantime, housing is suffering a bit. So keep an eye on what's happening there. In the UK, there's bits and pieces coming out on what Hunt may say tomorrow in the budget. And one of the lines was that they could allow the local councils to hike the council tax by 5% instead of the usual 3%. So people in the UK, get ready to pay a little more for your houses and your local taxes. I don't know. I mean, sterling is still beat, but every piece of information that's coming through is making me think more and more that tomorrow after the budget there may be a bit of volatility coming into the sterling, and I wouldn't be surprised it's rather to the downside than the upside, really, when I read all the different pieces coming through. Over to, well, I mean, the musing of the day was that Trump announced his presidential run for 2024. So get ready, Twitter will be red hot again, and it's going to be, if not funny, a bit bizarre going into 2024 again, because he's probably going to come out with some very spectacular one-liners. Over to China. The PBOC injected 71 billion yuan again overnight, and there's been a couple of articles coming out both ways this time, but one was interesting on Bloomberg, saying that one of the Swiss banks coming out saying that the property crisis in China could be as costly as up to $200 billion, which is I think a bit over the estimates that were coming out lately. I'm not sure whether the combination of the PBOC made it happen, but at least the Chinese yuan suffered overnight. We went up from low sevens in the dollar yuan up to 709-ish this morning. Let me just quickly check this. I'm not saying anything stupid. Yeah, we went into the 709s. I think they're close to 7, as I was already saying earlier. We should pay a bit of attention. For the time being, I've let mine go because the dollar looking a little bit ish, but I'm still a firm buyer in the low sevens for now. Coming back to the UK this afternoon, we've got Mr. Bailey and friends speaking in front of the Parliamentary Committee, and the main subject should be what happened to the GDP in Q3, which slowed down. But after this morning's hang on a minute. After this morning's CPI and PPI, I'm sure there's going to be enough chatter about inflation as well. That should happen around 2:15, 2:30 UK time. So keep your eyes and ears peeled for that one. It's going to be interesting. We have a running joke in our chat room saying that whenever Bailey speaks, the pound usually tanks. So it would be a surprise if it would be otherwise this afternoon. But never say never, of course. And we may have this outliner. Over to what we had in the data front. So yesterday we had this slowdown in the PPI. The dollar got hammered straight away, but then gradually coming back as the yields were coming back as well. The dollar made a bit of a recovery, and then we had this unfortunate Polish situation, sending the dollar even higher. But as we have seen, we're already back to levels pre PPI, and even some currencies are already higher than versus the dollar than when the PPI came out. Furthermore, yeah, we had a bit of speakers out as well. The usual German and Austrian ECB and Bundesbank members are still hawkish. They're still pushing for the yields to go higher. But then we had Visco out a few minutes ago saying that we may be ready for a bit less aggressive rate hikes, and that's just kept the euro when we were reaching for those higher levels here in the euro dollar and the euro crosses. It just seems to have quieted down the animal spirits a little bit. Still trading above 104 on the euro, but we were trading in the 104.30s, and we're now back down to the 104.20 level. Numbers overnight. Japan, it's getting a little bit confusing. We had a string of better numbers, and now we are starting to see reversals again. The machinery orders were particularly weak coming out last night. And then we had the industry activity index also diving back into the negative territory. So it's a bit ping pong on the Japanese data for now. It's keeping the yen in check, not so much versus the dollar, where we had this big setback from the 150s. But when we look at crosses, The yen is still on the defensive, and I'll come back to those crosses a bit later when we have a look at the prices. Aussie wage index bit higher. It's pushing up the inflation, but reading the comments, they're a bit 50-50 now. Between what the RBA could do. The RBA was a bit on the dovish side lately, but could this push them back into bigger rate hikes? It's a bit of a 50-50 coin toss right now. Aussie is doing pretty well, but is it dollar weakness or Aussie strength? It's still a bit undecided. House prices in China down. Yeah, the housing market they fell the most in, what is it, 7 years or so? Yeah, they fell the most in 7 years. So that also has put a bit of pressure on the Chinese yuan overnight. And then, as I was saying, the PPI and CPI data this morning in the UK running very, very hot still. We've seen the core came in a bit higher than expected, but similar as to what running last month. But then the headline CPI came in much, much higher than we would expect. There are some calls that this may be a month where we are seeing those very high prices, and that from next month's reading, those prices could start to cool off a little bit. But in the meantime, we have to trade them at face value, because what's happening next month on those readings is just speculation. What we have seen as well is that the past months has been reviewed higher as well. So do we dare to say that this is the peak? I wouldn't. But we will hear what Bailey perhaps has to say about it this afternoon. Italian CPI hitting the wires as well. Slightly weaker than expected, but look at those numbers compared to the prior month. They are massively higher as well. Again, these October data, and we've heard similar for the Eurozone in the past few days, is that the October month may really be the month where everything was shooting higher, and then from here see a bit of a peak, the peak coming in line with what's happening in the US. So what's further on the docket? And this afternoon we will have those weekly mortgage data coming out. Last week, if I'm correct, they saw a little bit of a better behavior than the week before. Still in a negative, but less negative than expected, if I recall well. And then the main event out of the US this afternoon will be the retail sales. Retail sales, those are real data. We know that they are not inflation adjusted for, but the market will trade them on face value, and keep a very close eye on those retail sales, because the dollar being on the defensive as it is, it may be an extra nail in the coffin, or bring people to some different ideas if the flows that we've seen over the past week and a half are enough right now. But looking at the way the market is trading, every data point pretty volatile today. Be prepared for some volatility again on the retail sales, because the market will really react to them. And then we're seeing the CPI out of Canada. And there as well could be a number that moves the markets. We've seen the Bank of Canada still on the hawkish-ish side of things right now, but in the last few comments there were a bit of signs where they also would like to see the peaks of this coming in, and so they can slow down a bit. But is the CPI going to give it to them? Since they are very close US neighbors, we may perhaps expect this to come down a little bit as well, but it's still speculation, right? And then furthermore, we're going to have the capacity utilization rate IP this afternoon. in the US, in combination with the retail sales, we could have some decent dollar volatility going into to the afternoon again. And then the weekly oil data last night, we saw a big draw on the API. Not sure if it had a big impact on oils overnight. I'll have a look at those a bit later. But they have been really volatile of late as well. So keep an eye on those for the oils. And we have a 20-year bond auction as well, so enough to keep us busy into the New York afternoon again. I'm not sure. Let me just see if Grega is here already.
Hey man, yes, I'm here.
Oh, and you're already promoted, Grega?
Yeah, everything.
Oh, okay, good. So I don't have to do anything anymore. That's fine. So I'll come to you a little later, okay?
Yeah, sure.
All righty. Okay, so let's go over to what's happened and to what may happen further. Go on to the charts. Okay, first of all, euro dollar. You guys seeing the euro dollar?
Yes.
Okay, thank you. So the first thing that we're looking at here is this 200 DMA. I'm not a big fan of moving averages on FX. I have to repeat it, but since the market is looking at it, let's have a look at it. And we are turning just around. So for the daily close, this could be quite important. We have broken above this 103.4060 that we have been banging on for weeks in the euro dollar, then had a setback on the Polish situation. But we can see here on the shorter time frame that we are holding this 102.80, 102.60 zone, which is now going to be watched by many. And then also we've held this little channel. Also, well, we haven't even retested it, but that I think is going to be another level that we have to keep an eye on going forward. Top side, I'd say yesterday's high. It's also a level that I was watching for prior tops and bottoms around this 140, 104, 70, 80, and then we'll have the next Fibonacci level to keep an eye on in 105. So 105 is going to be a bit of a psychological level, in my opinion, if ever we start to break above. I'm not sure that in the current context, with how the yields are moving, that we are going to go much further. But of course, the market is firmly in a dollar selling mode, dollar rally selling mode right now. So we can't exclude a push to there. But for me, in the short term, this level, this zone here should be respected. I haven't got much running in euro dollar right now, but I do have a bit of other stuff going on, which I will show after that, before I give the word to and the screen to Grega. Cable. As I was mentioning a lot of times already, 117.40.60, we've broken above trend line, last zones here, tops and bottoms, you name it. 117.40.60 is quite an important zone, and as well, it's been the latest wedge build that has been broken as well. Went above, had a near retest, and now we are going up again. Bit of a, I wouldn't put this move down to what's happened on the CPI and PPI this morning, because we had a little jump on the PPI CPI, but then we had a setback. And when we look at sterling crosses, for instance, which takes out the dollar, of course, of the picture, they haven't moved that much. Yes, the sterling yen is a bit higher, for instance, but if you look at stuff like sterling versus the euro versus the Aussie and the Kiwi, I don't think those crosses have been really on the move. So we have to be a bit cautious when we trade CPI and PPI as usual. But anyway, constructive for as long as it stays above this 117.5, and why not retest previous highs around 120 if this afternoon the data warrant further dollar selling. Eye on the dollar yen, volatile more than anything. But we can see a little bit of a pattern now starting to form here. We had this big spike lower, which held the prior level here around the 137 3/4, which is also a bit of a horizontal support on the spike lower. So that's one level that we can now take into account. And then we are building some sort of triangle here. It's a bit fragile. It's on the 1 hour, and we're actually turning around right here and now. Below there, I'd keep an eye on those prior lows in the 138.5s for the dollar yen. It's really depending on what's happening in the yields, as we know, and the overall mood towards the dollar is pretty negative for now. So if ever, however, we would start to find support and start to go higher again, there's a decent zone now, the 140.25.40, to start to keep an eye on the top side. If that would go again, of course we need confirmations above the prior highs, but I wouldn't rule out at least a retest into the 141s. And why not high 41s if the dollar would find a stronger footing. And speaking about dollar and yields, we have to still keep an eye on this 50 DMA in the US 10s. I think that's going to be the level that dollar yen watchers are going to keep a close eye on as well. It's a bit of a 386, bit of a latest move, Fibonacci as well. So this 384, 386 zone on the US 10s should be on your watch list if you're trading dollar yen and the yields would pick up just a little bit again. On the downside, 370 is the next level. The break here looks solid enough to me, but now it's over to growth, in my opinion, growth data to show us really the way. If the data, the real data continue to weaken, this 370 will really be under threat, and we can see it in the 2 years as well. There's going to be there's a bit of support here around 4.25, and for 425, 430, I'd say. So as far as the Fed expectations go, they signaled us that they will remain slow, but certainly not pivot yet. So there is a logic, as we already said, that we keep on hanging around here, which could be not too far from terminal rates, although we can't really say where they will end 25 or 50 BPs close. But if this afternoon already the retail sales and industrial production would be very weak, I think we may be in for a retest of those bounce levels here that we saw in the short end. So be a bit careful if that would be retested and broken, because there would be could be a quick dollar move as well. But to me, that's an open question right now. Get back above 442. Get back into the 440s. It may be over the correction, and we stall back here. And I think the 4.5 zone now would be not too far from equilibrium, I would say, looking at where we expect the terminal rates or the possible terminal rates to be in the dollar. So I think it's 4.5, around 4.5, and 4.25 here. Those are the two levels that we should watch in the short end dollar. then I have to show a little bit on the Antipodians who have been in pretty strong demand lately. So on the Aussie, as you can see, we've broken this trend line that was around 67.5, but there's a lot of traffic here in this 67.40 to 67.70. We are above now, but there's still a bit of a struggle here with this trend line. If we clear that one around 68, the figure, there may be another big figure waiting on top. So that's going to could be decided this afternoon. Interesting as well is that yesterday we saw a very big Aussie buying fixing, and even with the risk-off move that we had, the Poland-induced risk-off move that we had, Aussie didn't really stay below this already now this cluster of lines, and we started to go up again. So this level seems important enough now to keep an eye on the 67.40 in the Aussie dollar. And this morning we are back on the way higher because the dollar is on the defensive again. But it's struggling a little bit, and personally I'm still a bit more constructive on the Kiwi. We do have RBNZ next week as well, so bear that in mind. But since we are broken through the similar trend line that we had as in the Aussie, since we broke it above, Kiwi retested twice the 60-60 and then really moved higher through this horizontal resistance around 61.55-60, and we are now trading higher. So the next one here should be around 62.30 to 62.70. That's going to be a bit of a traffic zone, in my opinion, if we reach there, and not calling the end of it, but if ever we get there, I'd reassess what's happening in this pair as well. And from there, the real dollar will take over, in my opinion. I'm not sure that the Antipodians, unless we break much higher in commodities and stuff, that they have much further to run in the short term. I'm talking short term here, okay, guys. I'm not talking about any longer term considerations. Moving over to the one that I managed to pick this one up quite nicely around here. That's the dollar China. As you know, I've been talking about this 696 to 701 zone already a couple of times, but for now we can't trade below the prior low, and which was the springboard to go to the highs in the 730s. So we have to respect already the low sevens. I'm not sure how much higher this can go, seeing the relative weakness of the dollar. I would think anywhere between 710 and 712 we might start to find a bit of resistance here, and perhaps retest if the dollar is weak enough. If in turn we start to hold 707, 704, 5, we may have seen the bottom, and we may be in for a bit higher again around the 716. But that will depend. I think the CNY, CNH fundamentals are still working against them right now, seeing what the PBOC is doing, seeing what how the housing market and the property market is going. They're trying to reopen their economy, but it's going to be very, very slow. So to me, there's still reason enough to try and pick a bottom somewhere in this. And then last but not
hey guys, I'm here. Sorry, I'm late.
Thanks, Phil. Last but not least, the dollar mix is holding on those prior lows here, and for the time being, we're still seeing this America versus the rest of the world kind of moves, because if you look at the crosses in Mex and Canada, for instance, they are not really doing that well, especially the Euro, Mex and Euro Canada. But anyway, we're in a bit of a tight range here between 19 and a quarter and 1940s. If ever the dollar would turn around, I think we should allow for a move back up in the 1960s. But if the dollar continues to trade weak, this thing could finally get its tap to trade lower, perhaps into the for final moves into the 18s. That's for the dollar mix. Now, while Stel is here, quick look at the metals, and then Grega takes over. Are you okay with that, guys?
Sure thing, man.
Sure.
Okay. Stel, tell us all about it. Gold.
Well, look, we're still. It's still. I mean, theoretically, I don't want to sound too optimistic, but they're looking bullish, right? When gold broke the 1680. 1680, 1690, it just went straight up. We were talking about that for a while, and yesterday they had this slight negative day, but they're up against dates. I think it's at the moment it's noise. I will repeat that we need to hear from Jay Powell. We did get Lael Brainard yesterday saying that they're going to consider reducing the pace of the hikes. This is good news for gold and silver and metals and risk in general, and as long as yields are staying relatively low, and they are, 10-year US is still at 380 or so, I think this is very constructive. So gold in particular, there's we have the 200 DMA, which is coming up at 1800. That's going to be a very, very big level, and 1800 is nice round level, and markets like that. And it also it was also the highs from August, and also the lows, or roughly the lows from May. So it's a point of interest for sure. And there you go. Yeah, exactly. You have it there. And so 1800 is a big level. If that breaks, I think I think it's going to be very bullish. I almost want to see kind of a pullback before we break that. Same in silver. We were talking about that yesterday.
Yeah, but just on gold, where's your pullback? 1760, or is it 1760, 65, or is it lower? 17.
No, I think the pullback could be as low as the previous highs, which were 1725.
Yeah,
17. But who knows? But
right,
it's looking very constructive. I have to say that. And the dollar is helping for sure. The weakening dollar, but it's looking constructive. The question is the Fed. The Fed, they're driving everything. We need to hear from Powell. So, but for now, it looks good. It looks strong.
Yeah, I think it looks pretty good. There could be a bit of sweaty palms, I think, in the market if we went down to 17.25. That's 3% from here, right?
Yes.
3%. Yeah, I still think silver is looking better than gold, but yeah, I don't know. We're nicely holding here. Now we are even holding the 200 DMA 2145. Tried yesterday and the day before to get below and bounced. We were there this morning and bounced. And now we're back up in this 22, call it 22.25 zone, and that to me is the gateway for higher levels. Really, got to take those spikes into account, but I think really the 22.25 zone. If we clear 22.25 now, I think we're on our way to higher levels.
Yeah.
But I'm the same as Stelios here. I wouldn't mind. Because I'm trading it a little bit, perhaps more intraday, and I wouldn't mind a setback back down here on perhaps slightly okay data to get long at lower levels. If it goes above 22.25, I think I'll pay up for more. But let's see how it goes. The funny thing, and quickly gonna look at the Euromix for Catherine, but the funny thing about your saying, we still have to hear from Powell. We've been trying to look for something, and he can pop up at any time. Of course, all those central bankers can do, but he's not scheduled to speak anytime soon. and that to me is a little worrisome. If you're waiting for somebody to give you some confirmation or denial of what may happen, it worries me that they're not scheduled to.
Yeah. Having said that, you know, Fed members, they obviously sing from the same hymn, right? The hymn sheet, however you call it. So it's you know, Brainerd saying things she said, it's not going to be completely opposite to what Powell is going to say, but obviously we all wait for him to get the final confirmation. But you know, if we do start getting more and more Fed speakers on the coming out on the dovish side, then I think that's going to be very good news for metals and risk.
And Brainerd, let's face it, Brainerd was a bit dovish, right?
Yeah.
Brainerd was.
Yeah.
Okay.
Absolutely.
For Catherine, quick look at the Euromex. For the time being, I've got nothing running at all. I did trade it in and out a little bit in this zone, but I'm a tad worried about still for the time being what's happening in those the low yielder revenge trade which is going on now, i.e. the euro, yen, Swiss. They are doing better versus other currencies. I think we're still in this unwind of carry trade mode, and that could potentially bring Euromex back. Why not to the 2040 zone? I don't know if it's going to happen. I'm not sure if it's going to happen, but for the time being, it is possible. It's a big zone, right? Let me go on to the longer one. It's about your dollar mix from 2017 translated into Euromex. That red line comes in around 2040. That's going to be a big level to watch for me. If you look at the overall picture, the longer term picture, I'd argue it's still bearish. For as long as we hold below here, it's still bearish. And I may try to counter trade this if ever we see this. In the shorter term, and we might be closer to know what's going to happen in Euro crosses, because on Friday we will have the results of the Teltro repayment, and the Windows already said it was going to be big. So I don't know what's going to happen after that on with the euro, but we may be closer to getting an answer on this one. What I would say though, if we break back below 1994, 20 the figure, we may have seen the high here, because we could be technically speaking in a double triple top formation here, and start to get back below. Ideally, we should get back below 1980 to start to confirm, but I may be a bit trigger happy and already start to push again if it goes back down below 94, 95-ish on the Euromex. So that for now, I'm a bit cautious with it, Catherine. I hope that helps. And without further delay, I'm going to pass the baton on to Grega. Are you ready to share your screen?
He started. There we go.
Lovely. Thanks, Grega, for being with us today.
Yeah, Ryan is not feeling good, of course.
Yeah, our headmaster wave surfer is with us today. So guys, pay attention. Always interesting.
Yeah, for those who know how to count to 5, right?
Can you could you come just a little closer to the microphone, or do something, because it's a little muffled?
Okay, it's better now.
Yeah, lovely.
Yeah, that's better. Yeah.
Yeah. Okay. Perfect. So, well, I will firstly look at this correlation, this chart, to show you where my focus in. And this is on the top. I have the S&P 500 futures, and here you have these majors. And notice that since you see CPI print since last week, we have seen a very strong move to the upside, and I am interested always in the strongest currencies. And you can see that Aussie is up 5.6%, almost the strongest compared to others. So in my opinion, this one should be on our watch list in the risk on mode. And I think that we have room for more upside there. And based on this risk on bullish look, I also want to bring your attention to this S&P 500 4-hour time frame. Okay, so if we are in the risk on mode, then Aussie should resume to the upside. But the question is how far the S&P 500 could go. Well, if I focus on this substructure since start of November, you can see that I'm tracking quite impulsive run to the upside, but impulses are made by 5 subwaves. So in my opinion, there is room for more upside after this wave for pullback. So I think that Aussie, which is very strong, has room for further gains, while the S&P 500 is also still making this 5-wave movement to the upside. Also, if you look at, I have here just a second, I have here German DAX. Okay, German DAX also made a very aggressive break here above the trend line. So I think we have to respect the current bullish run. So if the S&P 500, which is not that strong like DAX, is also going to see more upside, then I think that German DAX will do the same, will continue to rise further. So looking at this one, you can also agree, I believe, that this is pretty impulsive price action. But again, it's not made by 5 waves yet. So if we are tracking a 5-wave movement, meaning that we should be aware of more upside after the pullbacks. So I think that those pullbacks that may occur in the short term on DAX, on the S&P 500, could be opportunities to look on the long side of Aussie, pound, even euro. So
Grega,
yeah.
can I ask you a question? The on your longer view on these DAX, had some people asking or commenting saying that they think 14,800 is going to be a massive level.
I think that good point.
Try to look short. Try to look for shorts over there. So I don't know what's your
actually. This is my primary count. Okay, suggests that we could continue much higher within this impulsive advance. And I have also another wave count, which shows that wave B could actually still be forming. And this is now pretty big consolidation. But notice that again, I have the similar levels here that you pointed out. So even if this whole structure since March of this year is going to be corrective, these levels will be pretty important for resistance. So 14,800 to 15,000, as I said, this could be very, very important. So even if we'll just see a short-term drop from there, like a correction within higher degree uptrend, I still think that this zone up there should be respected, as you said.
Okay.
Yeah, so based on both wave counts, I think that this level could be triggered and then some pullbacks could occur from there, higher degree. Okay, now also let me take a look on the 10-year US notes here. Okay, now this is the intraday look. Notice again, we don't have a completed 5-wave rise here. I think that we are again just only consolidating. So this price action is very similar to what you will see on the euro or pound. So I think that buying dips there could make sense here as long as we are trading within this impulsive recovery. And now finally, let's take a look on Aussie, since I mentioned earlier that is one of the strongest. Well, we are, firstly, let me take a look on these higher degree charts. I think I mentioned or discussed with Ryan in one webinar, we highlighted this major trend line of this downward channel, where market came out pretty close and now reversing to the upside. Also, you will notice that here we have the 61.8%, okay? The 61.8%, you have that trend line that I mentioned, you have potentially right shoulder here, and ideally even a very nice morning star formation could be forming. So if by the end of the month we will stay strong on the Aussie and stocks, I think that this currency has room for much more upside here.
What has to hold then if you have this kind of formation? What level should be holding at the end of the month?
Yeah, I will go now to the smaller time frames. Okay, so again, if we think that the market is turning and we think it will go much higher, we want to see and track impulsive price action. Impulses, again, are made by 5 waves. And if that's the case, then the next pullback that we are tracking, wave 4, should not trade into the territory of a wave 2, right? And because otherwise these overlaps suggest that this is not impulsive move anymore, because it's not just one-sided, but it's rather a correction. So as long as we are above this 65.50 level, I think that these bulls have legs for further upside. And since I said that S&P 500 and DAX are pointing towards risk on, Aussie is the strongest. We have the 10-year US notes that are still not completing this intraday bullish cycles. So I think that this Aussie, which is one of the strongest, could be very nice on the long side after pullbacks. I'm watching the next pullback. We are currently at the 161.8 for wave 3. That's a typical target for a wave 3. So when you get this extended lag, meaning that it's longest lag than the first one, that's when you could start considering the idea that this is ongoing impulse rather than correction. So watch out for this support at 666, not really the best looking number, but still, I think that this is a pretty nice support here, and I will be looking for potential longs here. As I said, Cayman, if we break 65.50, then obviously I would most likely adjust the views and would look back to the downside to retest the lows. But on the big picture, I still think that, believe that Aussie in risk on, I mean, years back, always when we have been massively in the risk on moves, Aussie has been doing pretty well. So I think that this one sooner or later will do the same. Also, if we look here, I have Chinese yuan, then we have the S&P 500 at the bottom, then we have gold. You can see that all markets are obviously moving into the same direction. Even Hang Seng Index is now trying to recover. It's recovering pretty well. So I think that these are all confirmations that Aussie is on the right track, in my opinion. Also, let's take a look on gold. Now, gold made a very nice and strong break to the upside, and it looks like that this wedge is being broken decisively. So I think that in the next level, 1800 is going to be very important. And I think that in the short term, there is room for this to be retested, because again, I will look at the price action of this current rise. So always when I will look for potential trades, I want to see if I can already count 5 waves within this current strong recovery, meaning that sooner or later resistance will hold, or maybe it's ongoing recovery. And if you look closely here, okay, I think that this is a very nice extended third wave. Okay, you can see again, much longer wave compared to the first one. So again, we are observing the clear impulsive price action because of no overlaps. And on the next dips of wave 4, usually the support will be found at the area of a former wave 4. So if I label this one for you, it means right there. Okay, so that's a very nice support, 1750. We have also here the previous swing high. I think that Stelio mentioned this one that could be retested, 1730. That's a very nice support as well. So clearly in that area, I think that longs could be quite attractive here in that zone down there, 1730, 1750. Also, we mentioned euro. Let's take a look on the euro. So euro is making a very strong recovery here. In fact, I can count completed 5 waves down here that was from May, June of this year. So sorry, of last year, not this year. So this can be a completed bearish impulse. Again, if that's the case, then much higher prices could occur. And in the short term, I am tracking again an incomplete impulsive price action. Notice that this was a very nice recovery, even extension to the upside after US CPI last week. And since we have seen a pretty strong close on Friday for the end of the week, stocks are also still trading at the highs. You have dollar, I mean, everywhere is pointing lower. So I think that the euro is still in the middle of this ongoing impulse as well. Watching for a wave 4, I have even intraday wave count here. So for those who maybe are observing more closer levels, if we are in a wave 4 now, support again at the previous fourth wave. It has been retested once here. It was yesterday with a spike, but that was only one leg to the downside. Now, always when there are corrections, well, corrections should be made by three waves. So that's, in my opinion, was wave A. You have a wave B, and I think that there are some stops probably placed below that level. It was also that was also low of the week here. So watch out for these prices to be maybe retested and then bounce higher. Again, 38.2% is what you should be looking at regarding the FIBs when tracking wave 4 compared to the previous extended wave 3. Okay. Also, let's take a look on dollar Mexican peso. Now you showed Cayman euro Mexican peso earlier.
I showed both, yeah.
Yeah, I mean, and there I didn't realize, I mean, it has a pretty impulsive price action there. Okay. Okay, I will delete this. Okay, so if I see this chart, if I don't know which market it is and I have to label it, immediately what I see is a very strong drop here, reversed by a very strong rise. Okay, and since current rise is already trying to erase and break the previous swing high when the starting point occurred of this latest leg to the downside, well, this makes me feel that this is a change in trend. And in fact, it looks like this can be ongoing impulse. So if we get this wave 5, this impulse would be confirmed. And in such case, I think that bottom here has been formed. And I'm afraid that then we will rally even further after any free wave setback. So if I keep this in mind, then I think also the dollar Mexican peso could potentially stabilize a bit. In fact, in the last few days, despite what we have seen on US dollar or maybe versus the Aussie, still dollar Mexican peso hasn't really seen a break to the downside like maybe a lot of us expected. So regarding what I see on the euro Mexican peso, I think that there can be some very strong support here around current levels. You can already see by the price action that is not that strong anymore compared to the previous drops. So this overlapping activity maybe suggests that we are in the final stages here for wave 3. So watch out for maybe for longer consolidation, but still, I think that sooner or later, dollar Mexican peso will come to the downside, but we should stay below that trend line. So if we retest the trend line, or maybe former wave 4, that's the key resistance here, 1960.
Okay.
Yeah. So,
all right, that's great. Yeah, it's very interesting what you showed on the Euromex, but yeah, there is of course the takes and the fundamentals, and they seem to align a bit, yeah, for more correction. I'd still personally consider it as a correction, but looking at it this way, yeah, we could go a bit higher. Anyway,
on Euro Mexican or dollar Mexican?
Well,
on both.
Yeah, on both, but the way personally I trade it is more the euro mix, because I kind of tend to trade the US or the Americas block versus the rest when I do carry trades or stuff like that, you know. So that's why I was saying that I was very cautious on the euro mix, because the dollar is offered. So you might not see it in that much in the dollar mix right now, because they are going a little bit hand in hand. But then the euro mix is undergoing the mutation. You see what I mean?
Yeah, sure.
All right.
Okay. So actually, that's it.
Yeah, I mean that's more than good enough. I'm looking at the clock as well, and I think it was extremely instructive. Thanks very much for being with us.
Thank you, Grega. Thank you.
Stelios, do you have any last comments, or shall we just close the books and see what happens this afternoon?
No.
Okay.
Let's see what happens now.
Buy silver.
Yes, I missed what you said the first half hour. So I assume you talked about the UK CPI and all that.
Everything
Yes.
you think of, mate.
Yes. Okay.
Grega, what you were saying?
No, that's it.
Okay. All right, then. Thanks a lot, still. Thanks very much, Grega, for being with us today. Dear audience, thank you very much for attending our show again today. I hope you make an amount of peeps to pay for the beers, the wine, steak and lobster, and we talk again tomorrow. Thanks very much for being with us. Have a good day.
Thank you, Cayman.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.